Okay, good afternoon. So today I'm going to do a short video about sources of finance. Now, the knowledge is really basic. Internal sources of finance, sale of assets, owner's capital, and retained profits. External sources of finance, leasing or renting, business angels, venture capitalists, loans, share issues, all of those are trade credit, all of those basic concepts. Okay, that's easy. Learning the knowledge is simple. Hit the textbook, get the definitions, look at the advantages and the disadvantages of each type of source of finance. But the key to writing good exam questions about this is to be able to make a decision about which type of source of finance is relevant in which scenario. So in order to do that, you need to consider the following things. First of all, what is the cost involved? Okay, so are there interest rates? Are there fees? Is there potentially, do you have to give up some of your ownership of your business? What is the actual cost of that source of finance? Next, if you have a need to keep cash flow in the business, is that something that you need to consider? Or are you capable of repaying your debts in the short term? Okay, so say for example you get an overdraft or you have trade credit. How easy is it for you to pay back that debt in the short term? Next, control. So say for example you give away equity or you give away some share ownership. That may have an impact on your decision-making ability. So sometimes you might choose to avoid that source of finance because you don't want to give up that control over your business. Next, flexibility. Okay, what are the terms and conditions of that source of finance? A bank loan will have a fixed amount of time and a fixed repayment schedule. Okay, terms of credit from a supplier, they are negotiated, they are non-negotiable. Once you've agreed them, that's the cost, that's the payback period, that's the time frame. So make sure that you understand some sources of finance do not give you flexibility. Say, for example, if you're leasing, you might be able to renegotiate a lease. You might be able to extend your lease at the end of the leasing process. Okay, so think about that. And next, if you have a specific need for finance, consider the long term versus the short term. So I'll give you an example. If you buy something outright with a loan, then you know how much you're paying and you know what you're getting for your money. If, however, you lease an asset, you are going to pay that lease payment over and over and over again until you no longer need that asset. So you might end up paying more by leasing in the long term than you would by buying in the short term. Okay, and it's these kinds of factors that you need to consider when you're making a judgment about which type of source of finance is the one for you. Okay, normally there'll be a case study attached to this kind of question, and there'll be clues in that case study for you to make that decision and make that judgment. Okay, brilliant. Okay, on to the next one. Bye. Subscribe.